Hello, everyone. Welcome back to the Matan Markets podcast. My name is Sofia Cruz, your host, and here we break down trending financial topics with insights from the sharpest minds of the industry. Today we have Matan Rosenberg. Hi, Matan.
Hey, how's it going?
I'm good. How are you?
Doing all right. Can't complain.
Thanks for being with us today here.
Yeah, thank you for having me. Happy to be here.
Thanks for making this time, taking it to spending with us and talk about what's currently going on. And could you introduce yourself a little bit more to our audience?
Yeah. So I'm Matan Rosenberg, but I guess you already heard that part. Senior here, studying finance, going to work in fixed income sales and trading at TD Securities in New York, full time, which is a little weird to think about. So I worked with the Treasury department. I've had a couple of various internships. Did 2 stints at the Treasury department on their Middle East North Africa team, TD Securities, and a couple other like private wealth management, asset management type roles, but. Decided to try a little bit of everything throughout my time at GW and make the most of it.
Making the most out of DC too, right?
Yes, exactly.
So you've had a lot of experiences, different angles of what's currently going on in the economy. You've been in the trading floor and also in the policy side, right? So
yeah, got to see, both sides of the same coin. It's definitely, interesting dynamic seeing, sort of trading floor where you need to know markets down to the second, and that informs,
be on top of the news and everything.
Yeah, informs everything at all times, whereas policy, it's hours is considered pretty fast in terms of what you need markets for. So.
Exactly. Yeah, and today we wanted to talk about a topic that we can never ignore, and it's inflation. When we talk about inflation, there's a lot of concerns of what's currently going on with the PCE inflation record. The core PCE was 2.8%, which is 0.8% greater than the Fed's targeted 2%. And that's telling us a lot about how the market's behaving, but is there a signal that you're taking out of this?
I think core PCE is definitely a big part of it because the Fed, watches that pretty closely. But the part that I'm really looking at right now is more so on the consumer spending side, which continues to outpace inflation. I think year over year it's at 4%. So with 4% consumer spending, which is, far outpacing that rate of inflation, you're seeing consumers that still have money to spend regardless of what's going on in the markets. And so that's just going to continue driving inflation with continued wage growth, continued consumer spending. And sorry, I meant wage growth was at 4% year over year. So you're continuing to see increased wage growth and increased spending from the consumer, weakness in consumer confidence. I tend to attribute that more towards, change in regime and politics more so than the actual strength of the consumer in terms of buying and spending.
Yeah, because these numbers are steady. They're like a linear pattern, and we just cannot avoid to see it. It's like growing over time, and it's just cards keep swiping, and economy is.
Yeah, exactly. Which is definitely interesting to see. Yeah. And I think as tariffs come into effect, and I'm sure the Fed is definitely thinking about this, but as tariffs continue to come into effect, I think that's going to really drive where the consumer is spending and if they're going to continue spending. And I think most of those tariffs come in tomorrow, which is going to be interesting to watch how that plays out.
Yeah, I really wonder your thoughts while you were working on your desk at TD on this.
Yeah, so, it really depends desk to desk. I rotated through 3 different desks. The first one was rate sales, which is treasuries, sovereigns, and interest rate derivatives. So that's really the most driven by this because Treasuries, as I'm sure you know, is really driven by inflation and policy and rates, and then various derivatives thereof. The second desk that I was on was a lot less driven. That would be the high yield bonds and leverage loans sales and trading. And there it's really, individual credit focused. So, you go from super macro to super micro, where you're looking at global events all the time to, hey, I really only care about this one company and how they're doing. And, you'll still chart macro events like home builders are very much driven by housing starts. Yeah. And then the third desk sort of sits in the middle of that. I was on the securitized products trading. So that's like mortgage-backed securities, which sits somewhere between, Treasury and a single credit. So you get to see the best of both worlds.
Yeah, best of both worlds. Yeah. Inflation's always growing, but there's a lot of concerns about stagflation, especially when banks have come out with a stagflation warning. And this is something we haven't seen since the 70s. And this is something that we take a little bit of insight into this because we haven't seen this in a long time. And I know that the question's like really big, like, do you believe stagflation's a possible concern or not? But I want to get your take on these rumors. Could there be something else behind these rumors?
So I definitely think there could be some merit to those claims. I'm not sure how much. I don't have a crystal ball, unfortunately. Otherwise, it would be a very different story. But I think there's really two sides to this. I think the first part, the argument for is tariffs will continue to drive up prices of both, raw goods and finished goods. So that's going to be one big part of it. And then on the other side, you've got sort of long end tips, which are inflation protected securities, also called real rates. Those are trending lower, which is a really interesting dynamic because that means that markets expect long-term inflation to cool down. But whether that's indicative of markets really seeing inflation cooling down or they see a more reactive Fed is to be seen. But it's definitely an interesting dynamic when we're talking about stagflation, and then at the same time, markets are pricing in more Fed cuts this year. I think now we're in the mid-60s for priced-in cuts and projecting out lower inflation.
Projecting lower inflation. When we're talking about this, it's just in the macroeconomic sense and also in the fixed income space. I want to get your take on what's something that you're looking out for the rest of 2025. Is there a specific focus that you're targeting?
Yeah, I think the big question on everyone's mind at this point is just rate cuts, if and how many. And we've gone from, I think it was 25 basis points priced in total rate cuts for 2025 in January to now, I think last Friday was 63 basis points. So the number of rate cuts priced in has increased, and whether that's the result of, overly hopeful markets or whether that's actually going to be the case is to be seen. But I think it's an interesting dynamic that as you've seen risk of inflation continue to increase, you're seeing more pricing in of rate cuts, especially as tariffs have gone into effect. But I think by and large, the market is a little bit too overexuberant and remains very data-driven, very bipolar in terms of its how much it's data-driven at this point. And so I think you're really going to see more data points come in. I mean, we're only about 3 months into the year. There's still another 9 months for data to come in and
we're 1/3 of the year.
With being, I guess, about a quarter of the year in, it'll be interesting to see how data continues to come in, especially since this Friday is non-farm payrolls. So we'll see if labor market remains strong or if things are starting to weaken and the Fed does need to cut rates to stimulate growth.
Yeah, and that's something that we need to take a look at because all these factors that we're talking about, whether it's PCE inflation reports or any charts that we currently have till right now, that's for February. Nothing about tariffs has gone into place by February. So
first ones, I think it is starting April. So
yeah,
and I guess today's April 1st. So April 2nd, tomorrow is when sort of big tariff announcement day is coming out. So I'd call that a pretty significant data point in and of itself. Whether or not we'll see it in April's data that comes out in May, or it'll take more of a lagging effect to come into play is to be seen. But it'll definitely have impact on data going forward through this year.
Yeah. Well, thank you so much for sharing your knowledge on these big macroeconomic factors. We need to take a look at all of these in order to draw our conclusions on anything related to the market. And it's so good to have you here because you've been, whether it's on the trading floors or the policy side, and that's just amazing.
Yeah, and thank you for having me again.
Thank you, everyone, for listening to our podcast. And if you liked this type of content, please make sure you follow us, you leave a comment, you share with your friends so more people know about the markets, and stay tuned till next week. Thank you so much.
Thank you.
The Midnight Markets podcast by the GWU Stock and Portfolio Management Club features student discussions on finance and market trends. This content is informational only, not professional advice.